everyone, John and Ray here, slingshotfutures.com. Welcome to the daily futures market outlook for tomorrow's trading. Tomorrow being the 13th of the month, February 13, 2018. As always, before you jump on in here, make sure to swing it over to slingshotfutures.com, scroll down and click on the Join the Daily Outlook newsletter. From there, you'll be able to sign up for our email newsletter list so you'll be notified every time one of these videos comes out. Along with that, in the email itself, we go over a bunch of things that we don't have enough time to cover in the video. That's going to be different stocks, cryptos, anything of interest that looks pretty good will be showing up in that newsletter, so make sure to sign up for that so you don't miss any important information. Of course, along with that, make sure to click on the live trade room subscription and trial info where you can sign up for a free 3-day trial in the live trade room so you can kind of hang out with us for a couple days, get your feet wet, and kind of see what we're all about. It's a really good way to get your feet wet and, yeah, just kind of hang out with us for a couple days, see how we trade, and be able to ask some questions here and there. Really awesome environment to be a part of if you haven't signed up already. Now, a couple things. First of all, the euro dipping back to major support. We're finding the euro resting on top of that rising channel support, and we are seeing a good amount of bullish continuation. Now, the one thing that we were talking about on Thursday into Friday was simply that the buyers, this is the zone that they want to buy into, but they weren't showing up to the party. We had a lot of really lackluster bullish movement. The buyers tried coming in, big bull engulfing candle, ends up just flopping right back down again. They go back down to the lows and potentially trapping the bottom. We were looking for a trap a little bit further down, didn't quite make it. But the big thing that we were looking for here was for the buyers to prove it, for the buyers to show up and really start kicking the market back to the highs, because we have a very strong bear breakdown here that we could start taking back. But if we fail to take that back, the sellers are going to be looking for downside objectives based on the fact that this was such a strong breakdown. And so far, we're holding. Now, we're not holding very well. If we look across these highs here, we can see that we're not really getting a whole lot done. They poke their head above the highs, and now we're turning back again with another really strong bull bar. But we really need to see this next 4-hour bar close strong. If this fails to close strong in terms of follow-through, then we're going to start seeing some red flags. Now, that is kind of a double entendre, and that the sellers will start piling back in again. But we need to see the buyers really shove this market back and aggressively challenge some of these earlier zones. We had that earlier level of support and resistance right here, and that's at 23,695. Buying now, that doesn't really allow you a ton of room. You're looking at, you know, from 170 up to 695, basically 500 difference up to that area. That's really only 100 ticks. So the fact that we don't have a ton of room for long-term traders might just mean that we go a little bit chop and slop. There will be buyers above this most recent bull bar that is a very strong-looking bull bar and a secondary bull attempt off of the lows to try to kick that move off. And that's really what we were looking for back on Thursday into Friday, is seeing the buyers show through with some confidence. Now we have the candles. Now we need to see them follow through and give us that confidence that they are trying to take back over. In the short term, the one thing that, well, we kind of have two different situations here. The first situation is we see buyer continuation above this and we get a good rally back up towards 23,695. If we do get that 23,695 rally to the upside, then, well, one of two things. It acts as resistance, we start pulling back, or we break above it and use it as support for more continuation to the upside. The other concern, the other thing that we want to keep an eye out is if we run into a range high, we trap above those highs and then turn right back down again. Think twin reversal here. That would be a big, big bear sign for the sellers to try to pile drive through the lows, knowing that there are a lot of buyers who bought in at these lows with stops just underneath that bottom, and that wouldn't be a surprise at all to see the sellers try to shove the market through there to trap it down into some of these earlier areas of support. So it is something that we need to be careful of here on the euro. Right now we're resting on support. The overnight session, assuming that the buyers are going to be coming in to try to drive the market up towards 23,695. On gold, we're still maintaining that bounce off of the earlier dip down to around 1310, almost a perfect dip down there, and really the buyers have a decent amount of strength to the upside so far. We have a lot of sell attempts, the sellers trying to come in off the moving average to try to push the market back down. No success at all, turning right back around into a strong bull bar. But then we're starting to get a little bit choppy because the buyers are completely lacking follow through as well. Now, this could be a couple different things. First of all, this humongous bull bar right here could just be simply a sign of exhaustion from the buyers. And a lot of times when buyers are buying that aggressively, their target's going to be those high closes to the highs, this zone. And we came back up into the high close area, and we're not able to close above it. And that is a little bit of a clue. That's telling us that if we do see another attempted sell side move from the bears, we could be looking for one more dip down into this buy zone before turning back around and going back higher. Right now, that level of support and resistance is chopping through. It's been there for a while now, 27.5. And, well, as long as we're around or inside that area, we're going to have a little bit of chop and slop, and that's what we're seeing right now. So buying, well, unfortunately, we're a little too close to resistance. Selling is really the only option. Although it is a slightly lower probability option, it does make a lot more sense given this context. So right now, I think in order for me to even be interested in selling, we're going to want to start breaking through some of these rising resistance areas, rising support. It looks kind of like a flag. So you could be looking for some form of a flag breakout to the downside and looking for continuation to retest back into those zones. So the overnight session, if the sellers fail here, then we're looking for a reversal back up to continue that bullish breakout that we've been waiting for since down here. But if that fails, if we continue to see weakness around these highs, we could be knowing that the buyers are just looking for a better price. And that means that all of the major buy support dissipates and they wait until better pricing at a lower price. So we'll have to wait and see what they want to do. But in the overnight session, anticipating a slight bear edge to try to get back down to 1310. Then we've got crude oil. Crude oil dipping down into major support. We finally have a perfect test at 59.07, and even at 59.07, they blew through that as well a little bit before reversing back up. Notice this candle right here even had a hard time closing back above it, even though it was at one point a huge bull bar. They gave quite a bit of it back at the end there before finally seeing a little more continuation. Like we always talk about with exhaustive type moves, they blow off, and usually when they blow off like that, they want to come back and retest the highs of where that blow off started, and that is exactly what happened, and now we're seeing a reversal back down again. This level of support still maintains. 59.07 is not a level that I want to deal with, but right now, sellers do have a shot at trying to continue this move back to the downside to maybe even retest not just the low closes. That is the primary objective right now, to get down to 58. What is the low close of that? Low close 58.84, but the next area would be just down to the lows. Seeing them push back down to retest the lows at 58.07 wouldn't necessarily be that bad. So we have two different target objectives to the downside for crude oil, looking for a little bit more of bearish response to drive the market down and get some of those objectives. For right now, though, we've blown out of pretty much every level of support or resistance that we could ask for. Now it's just a matter of seeing where they actually want to start bouncing. We're at the previous swing high support, and if we look at this from a fib perspective, trying to stack as many levels as we can on one area, well, it doesn't really give us a ton to work with. If we measure up from the bottom to the top, we have a 61.8 that lines up fairly close. Horizontal support and resistance, we've got two levels, but it just doesn't look like we want to respond too well to either. So we need a little bit more info here on crude oil. For the most part, though, in the overnight session, anticipating bearish movement down to 59.07, and potentially a little bit further to that 58.84. And then finally, the S&P. The S&P giving back everything that they were able to accomplish on that attempted bull rally, as expected, and continued back down to retest those low closes. Even made it almost down to a new low. They came so close. They just missed that low by a little bit, and now it reversed back higher. This could just be the start of a little bit of a really weak bottom and maybe a wedge top. We're not really getting a whole lot of information here, and likely this is just going to transition into one giant range from 2,558 or so to the highs at around 2,705. That's likely going to be the area that we get stuck in, and until we kind of break out of that, we might have a little bit of a hard time. But that horizontal range here, we can mark that up just because, well, nothing else is happening here, so we might as well get something on the chart. So we've got that, and the lows of the range probably going to be around those earlier low closes, maybe modified just a little bit to around there. So we're looking at a potential range formation, 27.03 half down to 25.58 and a quarter, and probably just going to ping pong around inside there until the market decides what they want to do. Is this all the correction that they're going to get and we go flying back up to the highs, or is this just the first leg down in a bigger picture to continue the smackdown that has been going on in the index markets? We'll have to wait and see. You know, if we zoom out a little bit more to a daily chart, we can see that this might just be one leg so far. And a lot of times, corrective phases come in the form of two legs or more, and we could be looking for a much larger drop if the buyers can't prove themselves above 27.03 half. If we find some failure at 27.03 half, then that might be the all she wrote before we start plummeting back to the downside again. But for right now, as long as we're stuck inside the range, we're looking to treat it as a range. We had a bullish bias going into this range, so looking for lows on the buys. But honestly, with such a strong drop off the high, could probably look to sell the top as well. So buy low, sell high, stay out of the middle. And well, unfortunately for us right now, we are smack in the middle. So think we need a little bit more info, but likely anticipating if we can get a test of 3.5 in the overnight session to find some selling pressure from there, or a test of 58 quarter on the bottom to look for some buying there. That's going to do it for the outlook for tomorrow's trading. As always, there's a lot of stuff that we're kind of waiting on. It feels like the market is trying to find a balance before another move. What that next move is, can't really tell yet. The index markets, again, on a daily chart, that might just be one big bear leg down and they're looking for a second one. But on faster time frames, we've already had a second attempt that failed to break a new low. So a little bit of a chop in terms of what the markets are telling us, and that usually means that, well, we just got to sit on hands and wait for a little more info. Overall, though, plenty to work with going into tomorrow's trading. As always, like we always say, make a plan, trade the plan, follow those rules, and you should be okay. Until next time, we'll see y'all then.